What if I told you that while most people were sleeping, something quiet but massive was happening in the silver market, and almost no one in mainstream media is talking about it? No breaking news alerts, no urgent headlines, just silent movement that could change prices faster than anyone expects. China and key Asian players have been accumulating silver at a pace that should make every investor stop and listen, because history shows that when this kind of accumulation happens, the market reaction usually comes later, and it comes fast. Before we go deeper, if you want calm, clear breakdowns like this without the noise and hype, make sure you like this video and subscribe to NeuroSnapx. It really helps the channel grow and makes sure you don't miss what's coming next, especially with how fast the story is developing. Before we go deeper, if you want calm, clear breakdowns like this without the noise and hype, make sure you like this video and subscribe to NeuroSnapx. It really helps the channel grow and makes sure you don't miss what's coming next, especially with how fast the story is developing. Now here's where it gets interesting. Over the past weeks, data coming out of Asian trading sessions shows unusually high physical silver demand. Not paper contracts, not promises, but real metal moving into vaults. China, in particular, has been quietly increasing imports while reducing exports, and that imbalance matters. When a country with massive industrial demand and long-term strategic planning starts stacking physical assets, it's rarely random. Silver isn't just a precious metal there. It's tied to solar panels, electric vehicles, electronics, and national supply chains that can't afford disruptions. Been seeing tighter availability. Premiums on physical silver bars are rising, even when spot prices look calm. That gap between what the screen says and what people are actually paying is one of the biggest warning signs in any commodity market. It suggests that supply is not as comfortable as it appears. And when supply tightens quietly, price moves tend to be sudden, not gradual. What makes this even more important is the global backdrop. Western markets are still heavily focused on interest rates, inflation numbers, and stock volatility. But Asia is playing a different game. Instead of reacting to short-term headlines, they are positioning for long-term security. Silver fits perfectly into that strategy. It's undervalued compared to gold historically, it has strong industrial use, and it's still small enough as a market to be moved by large players. You might be wondering why this matters to you right now. It matters because these accumulation phases don't last forever. Once enough physical silver is locked away, liquidity dries up. That's usually when price discovery gets aggressive, and retail investors hear about it only after the move has already started. By then, emotions take over and people chase prices instead of positioning calmly. What we're seeing now feels like the calm before that moment. No panic, no excitement, just steady, intentional buying. And when that's driven by China and Asia, it deserves attention. This doesn't mean prices go straight up tomorrow. Markets never move in straight lines. But it does mean the foundation is being built quietly, away from the spotlight. As you listen to this, think about how many major market moves in the past started exactly this way, with silence, not noise. That's why channels like NeuroSnapx focus on these early signals instead of reacting after the fact. As we get closer to the end, I want to hear your thoughts. Do you think China's silver accumulation is purely industrial, or is there a bigger financial strategy behind it? Drop your opinion in the comments because different perspectives help everyone see the full picture. And if you found this breakdown useful, share this video with someone who still thinks silver is boring or irrelevant. Sometimes the quiet markets are the ones that move the loudest later.